In this video, I'm going to dive into the 12 most popular ETF investing portfolio strategies, and as a bonus, I'm going to be ranking every single strategy from D tier being the worst tier all the way to S tier being the best tier of the best investment portfolio strategy out there in the market. This is all going to be my own personal opinion based off a 3-category scorecard. Number 1, being simple and easy for new investors to the stock market or beginners. Number 2 is going to be to generate as good returns to the S&P 500, which is the index for everyone to track or at least beat, because if you are really not going to be keeping up or even beating the S&P 500, is your strategy really worth investing in because you want to have the most gains in the long run? And number 3 is going to be if you can comfortably buy and hold your strategy for many decades and comfortably sleep at night. So without further ado, let's get started. Our first strategy is the one ETF portfolio of US stocks. A one ETF portfolio consists of only one ETF or index fund. And 3 of the best ETFs that come into mind for this strategy is either going to be an S&P 500 index fund like Vanguard's VU or SPLG, and a total stock market ETF, that being VTI by Vanguard, amongst other great alternatives. These funds invest in only US stocks, mostly concentrated in some of the best and largest performing companies in the USA. They have very low fees and amazing diversification since they own hundreds if not thousands of different companies from different sectors of the US stock market, and have even kept up with, if not outperformed, the S&P 500 index over the past 5 and 10 years based off Seeking Alpha data. Going to our scorecard, I would say that this strategy is very simple and easy for anyone to understand. It checks off our box for the return standpoint, and I can personally and comfortably sleep at night for many decades with this strategy. So the one ETF portfolio of only US stocks, without a doubt, receives an S tier ranking. The second strategy is another one ETF portfolio, but invests in the entire world. For a world index fund, I'm talking about Vanguard's VT, since this fund invests in stocks in North America, but also other stocks from many different regions and markets that are foreign. The benefit of a world index fund is that you have maximum diversification because you have large cap, mid cap, small cap, and even international stocks in the mix, so you aren't concentrated in only the United States in your portfolio, and you're actually very diverse in your portfolio. VT has very low fees, and it's a strategy that is very simple and easy to understand for any new investor. VT has historically underperformed the S&P 500 over the past 5 and 10 years, but in my opinion, it has the potential to outperform the S&P 500 in any given year because of its global diversification. And I could personally sleep very well at night because I own every single stock in the entire world. So with all that in mind, I will give this strategy an S tier ranking. The third strategy is the ETF spam strategy. This strategy involves owning way too many ETFs in your investing portfolio, which will make your portfolio really unnecessarily complex because you can't decide on one or a couple of ETFs in your portfolio because there's hundreds if not thousands of ETFs to choose from. Some common ETF spams I've been seeing is either owning way too many broad market ETFs when in reality you could own just one, or when you have a ton of similar ETFs, so your portfolio's fund overlap becomes unnecessarily and insanely high. This strategy is a very common mistake I see a ton of ETF investors make, so in my opinion it is sort of simple and easy to do, but I would not recommend it. And you can either underperform, keep up with, or even outperform the S&P 500 because of your unnecessary over diversification, or you might even be concentrated to whatever sector or ETF you choose. And if it floats your boat, I guess you could sleep well at night with this strategy, but I personally won't be sleeping as well because I know I can make my portfolio way more simple and easy to follow. So with all that in mind, I will give this strategy a C tier ranking. The fourth strategy is the 2 ETF portfolio that involves a broad market and dividend ETF. A 2 ETF portfolio involves, well, 2 ETFs, traditionally a broad market ETF and a dividend ETF that invests in stocks that pay a dividend. This could be a very good strategy if you like the diversification of a broad market ETF with its solid returns, but you also want that dividend ETF that is less correlated with the broad market ETF from a fund overlap standpoint, and it will pay those dividends either quarterly or monthly, so you can grow those dividends over time to be material enough to pay off some expenses in retirement and live off dividend income. This strategy is very simple and easy to follow if you love the market, but you also love receiving high dividend payments. Your returns for the most part will either keep up with or even sometimes outperform the S&P 500, but for the most part, you will actually keep up with the S&P 500. And I could personally sleep very well at night with this strategy because dividend stocks invest in companies that are too big to fail, and they are large companies that have great balance sheets and great business models. And broad market ETFs are going to be top tier funds, so this strategy will receive an S tier ranking. The fifth strategy is another 2 ETF portfolio, but this one has a broad market ETF and a growth ETF. Growth ETFs invest in fast expanding and often more volatile companies that will hopefully achieve above average returns. Some of the best growth ETFs I like are on your screen because these funds provide a large exposure to technology and some of the best growth stocks available in the stock market. Back to our scorecard, this strategy is going to be very simple and easy to understand, but it will definitely increase the risk and volatility of our portfolio. Historically, growth ETFs have largely outperformed the S&P 500, even pairing it with a broad market ETF. I can personally and comfortably sleep very well at night for many decades with this strategy, but only if you have a high risk tolerance and a long time horizon in the stock market to stomach all the volatility that comes with a growth ETF. Now, with all that in mind, I will give this strategy an S tier ranking. The sixth strategy is the only growth ETF investor. This strategy involves only investing in 100% growth ETFs. This is a very high risk, high reward type portfolio if you have a higher risk tolerance and a long time horizon in case we have a tech bubble like in the 1990s, and if that bursts, then oh well, hopefully you can hold for many different decades. This strategy is very simple and easy. It's historically outperformed the S&P 500 by a very large margin, and I would say I could sort of sleep well at night with this strategy because you do have some very good stocks in these funds. However, you are not diversified at all into other different sectors, not even in value stocks and in other great segments of the stock market, because you are very heavily concentrated to only tech stocks for the majority of your portfolio, and when those go down, your portfolio will see significant losses. So with all that in mind, I'm going to give our first A tier ranking to this strategy. The seventh strategy is another 2 ETF portfolio, but involves 2 quarterly paying traditional dividend ETFs. Why this is a traditional dividend portfolio strategy is because it does not have any covered call ETFs to generate its income. This strategy is very simple and easy for anyone to understand, preferably if you love dividend investing and if you have a lower risk tolerance and if you want those dividends for those retirement funds and expenses that you might incur, or if you just love dividend investing. The returns of this 2 ETF dividend portfolio usually keeps up with or just slightly underperforms the market over a long enough period of time, but there are some years when this strategy will actually outperform the S&P 500 if value outperforms growth, or we are in a recession when dividend stocks will traditionally go down way less and keep your portfolio afloat than their growth stock counterparts. And I would easily sleep very well at night with this strategy to have safe and steady returns. So with all that in mind, I will give this strategy an S tier ranking. The eighth strategy is similar to our previous one that we just talked about, but we are adding a covered call ETF to the mix with a quarterly paying traditional dividend ETF. A covered call ETF exercises call options on the underlying stocks that the fund owns to generate its high dividend income. One downside I would say is that these covered call ETFs have a lot higher fees and they don't go up as much as the index that the underlying fund tries to track. I would personally say that this strategy is not simple nor easy to understand for anyone getting into the stock market, because once you involve call options into your strategy, it might become a lot more complex than it is. And a lot of people don't even understand how covered call ETFs generate their high dividend income. They just buy it because it has that high dividend yield and then just don't really understand what they're even investing in. Covered call ETFs slightly underperform the market or the S&P 500, given that you forego any upside potential from the call options in your covered call ETF. I guess I could say that I would personally be able to sort of sleep well at night over many different decades, but you could get way better returns if you just invest in a broader market, growth, or even just traditional dividend ETFs. And covered call ETFs are still heavily volatile than people think, and honestly, they have shorter fund inceptions, so we don't even know the long-term potential of some of these covered call ETFs, and most likely the stock prices actually go down over time with these covered call strategies. So with all that in mind, I will give this strategy a B tier ranking. Our ninth strategy is the only covered call ETF strategy. This strategy is very simple. Only buy and hold covered call ETFs if you want dividend income right now. Back to our scorecard, this strategy is not simple or easy to understand. The performance of these funds will definitely not keep up with or even outperform the S&P 500 over a long enough period of time, and I personally won't be able to sleep well at night if I only have covered call ETFs, because like I said before, you forego any potential upside on your ETFs or your stocks that you hold in the fund, and I personally would like to have capital appreciation alongside maybe some dividends, so broader market ETFs and even dividend ETFs that are traditional are the route to go if you want to have the best returns possible in the long run. So with all that in mind, this strategy receives a C tier ranking on our list. The 10th strategy is a 3 ETF portfolio. A 3 ETF portfolio consists of a dividend category, a growth ETF category, and a broad market or foundational ETF category. Now, this is one of the more popular ETF investing strategies I've seen lately in the stock market, because you could pair a lot of amazing funds together for and even weigh them according to your age, your risk tolerance, and even your time horizon in your investing journey. This is a very simple and easy strategy, and the historical performance of this strategy has actually outperformed the S&P 500 over a long enough period of time, and I could personally sleep very well at night with a 3 ETF portfolio, knowing I have dividend, growth, and even broader market stocks in my basket for my investing portfolio. So with all that in mind, I will give this portfolio strategy an S tier ranking, joining some of the best strategies in the stock market. The 11th strategy is the ETFs plus individual stocks strategy. I hope the core of your portfolio is going to be with a broader market, dividend, or even growth ETFs that are high quality and low cost funds, plus individual stocks that are preferably large, well-established companies that are blue chip stocks, so keep that in mind. I wouldn't say that this is a very simple or even easy strategy, because it does involve a ton of research and a ton of time to pick all the stocks in your portfolio that are going to be individual stocks. And inherently, individual stocks are going to increase the risk tolerance or the risk of your portfolio, because that's just how it works with individual stocks. This strategy, I would say, could either outperform the S&P 500 by a very large margin or underperform the index depending on how well your individual stocks picks. I would personally say that I could sleep very well at night if I am the best stock picker in the entire world, and if I have a large risk tolerance that is going to be more than your average investor. So with all that in mind, I would give this strategy an A tier ranking. The 12th and last strategy is the 4 ETF portfolio. which is essentially a 3 ETF portfolio, but we are adding another ETF or fund as a high risk, high reward type play. Traditionally, it's going to be with cryptocurrencies like Bitcoin or Ethereum. Back to our scorecard, this is not really a simple nor easy strategy because we are going to be making our portfolio a little bit more complex because we are involving cryptocurrencies, which is a complex asset in nature. A 4 ETF portfolio has the potential to outperform the S&P 500 over the long run if your cryptocurrencies do well in addition to your 3 ETF portfolio, which it has done in the past. But like I said before in many other videos I've done, past performance is never an indication of future results or returns. I would personally wake up in the middle of the night if I had this portfolio and check my portfolio because I have cryptocurrencies which are available and open 24/7, or if you have an ETF, then it's not going to be that way, but still it's going to be very volatile, really volatile actually. And if you have this portfolio, I would recommend you have a smaller slice of your portfolio to cryptocurrencies if you choose a 4 ETF portfolio. So with all that in mind, this strategy will receive an A tier ranking. If you guys like this video, please give it a like because this cute puppy did. And right here is going to be another 3 ETF portfolio, which is my portfolio that I have over $100,000 in. So go ahead and check out my portfolio. And right here is going to be answering the question of how many ETFs you should actually own in your portfolio. So I love you guys so much. Continue to crush it in the stock market and take it easy. Peace.